Thank you for tuning in to another episode of Around the Coin. Today's guest is Miles Paschini, the CEO and co-founder of FV Bank. Miles previously was a fintech entrepreneur, having started multiple businesses in fintech, and he was awarded seven patents related to payment processing services during the development of EWI Holdings, which was acquired by Blackhawk in 2006. In addition to developing the industry's first cryptocurrency linked debit cards, which we talked about on the podcast, Miles and his co-founder at FV were also the first in history to be awarded a U.S. patent for the development of stablecoin instruments to be backed by sovereign debt and on-chain KYC. We talked about the impact that FTX and that ordeal is having on the crypto industry, namely how banks and exchanges are working together today and how they may be impacted by upcoming regulations, impacted by the collapse of FTX. A lot of that story is still unraveling, so we didn't spend too much time there. We talked about the impact that the U.S. Federal Reserve and Bitcoin have on each other and how the tension there may play out in the future. And largely, we discussed the role of cryptocurrency and blockchain technology in the world, how money is transferred between countries. And Mike has a really interesting, unique background, having been in fintech so long. He was in the boardroom at Visa, MasterCard, and we talked about some really amazing ups and downs that he's had on his career. FV Bank is one of the few banks out there providing services for crypto companies, and it's a very much needed service out there. The demand is huge, and there's not many companies doing it, not many banks out there. So really excited to support Miles and hope you enjoy the conversation. The show today is sponsored by Kickfurther. Kickfurther is the world's first online inventory financing platform that enables companies to access funds that they're unable to access through traditional sources. Kickfurther connects brands to a community of eager buyers who help fund the inventory on consignment and give brands the flexibility to pay that back as they receive cash from their sales. Visit kickfurther.com for more info and use kickfurther.com/get10, GET10, to get a credit, and let me know what you think. And here you go. Enjoy the conversation. Here is Miles Paschini. All right, Miles, I'm excited to chat with you. You're running a really interesting business, a bank, FV Bank, that is leaning to or catering into the crypto world. Certainly, I imagine you couldn't have predicted the state of the crypto landscape today, especially if I asked you a year ago. Maybe we'll just start there. How do you think, maybe even in hindsight, how do you sort of describe where crypto is today and blockchain technology, and maybe even the relationship with the existing fintech businesses and what the perception is from folks coming from more of a traditional fintech background about crypto? Love to just hear your perspective on that.
Yeah, I mean, I certainly wouldn't say that I could have predicted where we are today, but I think that, the basic thesis of what FV Bank is all about was to some great extent predicting where we are today. And that is that, the industry was going to require regulated partners for certain functions in the industry. Well, I'm very much pro like self-custody and decentralization. I think those are great, but based on my, my business background and being involved in crossover business between fintech or between regulated finance and crypto since, let's say 2012, 2013, the writing was kind of on the wall that a lot of the portions of this industry were going to fall into regulated categories of business. And I think that the lack of service providers that are, that have oversight, have led to a lot of, the recent meltdown, especially FTX. I mean, you start seeing the unraveling, albeit, unverified, but the unraveling stories that you're hearing is there was no corporate governance, there was no oversight. And so our view and the reason why we created FV Bank was we believed that there was a role to play with, regulated entities who would interface with blockchain and crypto, and that we could be a partner to, those entities. As much as I'm a big fan of crypto doesn't really exist without fiat. I know there's, maximalist kind of point of views that we'll end up in a world that's only Bitcoin, but for the foreseeable future, as far as I predict, there's a relationship between fiat and crypto that's going to exist. And so if there's going to be a relationship between fiat and crypto, that means that you have to have regulated partners involved in, many aspects of the on-ramps, off-ramps, transmission of money, custody of assets. All those things are regulated activities in the TradFi world. And I think that they cross over and have a very important role in crypto.
Yeah. And so now what was or maybe even today, what is the overall sentiment from leaders and banks across the US towards crypto? I know generally, especially the large banks, and I would imagine this is probably pervasive, is that they're very cautious just in nature of banks. And they don't have an understanding that, and that's why they don't have an appetite or desire to create programs to bank crypto companies. But aside from that, the industry and crypto and blockchain seems so inevitable that I would imagine, I would have expected by now that more banks would have created programs to bank crypto companies. Is it largely because of the lack of regulation that they're just categorizing crypto businesses as being too risky, or is there other things that go into their decision?
Well, I think it's probably two general categories. One is that, banks are regulated. And so there's not clear guidance from their regulators as to, what their role can be. I mean, the OCC did a reasonably good job a few years ago describing, what a bank could do in the space. And that's predominantly like the OCC opinion letters that were written about 2 years ago, really give us the framework under which we operate. But still, there's not really clear regulation as to, what are the boundaries of a bank's activities, how do certain aspects of things like travel rule and, where does KYC and CIP play a role? Very clear regulation doesn't exist. There's best practices for sure. But I think one is that the lack of clear regulation, especially for US banks, is keeping a lot of banks out. And I think that, the recent events have not helped the situation at all because, it may help in the sense that maybe we'll finally get clear regulation. But it hasn't helped, prior to these events and leading up to these events, it hasn't helped people who were essentially risk managers in banks to say, well, there is some clarity and maybe we can step in and we can get involved. The recent events haven't helped. I think the other category is really that, when you're running a financial institution, it's all about risk management. And, there's financial institutions that specialize in certain areas of risk. I've given the example before, like if you're, an ag bank and you're used to lending money on farmland and tractors and warehouses and milking machines, and, that's your business, how to underwrite it, the risk, the ROI. I mean, that's your specialty. And so you have financial institutions that are in many different types of those categories. There's very few who have invested in developing strategies around risk management for transactions that are interrelated with crypto. And so, you have to build up an expertise in understanding what is a risky transaction relative to, let's say, a crypto exchange versus a risky transaction where, someone's buying farmland. I mean, they're just totally different worlds. And I think that that is a big barrier, is that people have not invested in the staff and the infrastructure, and build the policies around what constitutes risk in a particular vertical versus another.
Mm-hmm. And there's a few banks out there that I know that we use when I started a crypto business in 2018 that were pretty early. Silvergate comes to mind, and there's, I'm sure, a couple others. Where is it now? Are there a handful of banks out there that now specialize in crypto businesses? Is that number growing? And then I'm curious what it was like starting FV and how you started a bank in general.
Yeah, so I think the number globally, it's just horribly small, right? It's probably like 10 12 banks worldwide
Right.
that like openly and actively work in crypto. In the US, you probably have, 2/3 of those based here in the US. But still, that's nothing compared to the demand versus the supply is just completely, off the chart. And so we definitely need more financial institutions to get involved in the space so that, more standards and more best practices will get established as more people get involved. But yeah, I mean, it's still extremely limited as far as the banks who are actively and openly involved. I mean, so I think there are some banks who are now starting to dip their toe into the space and taking like maybe portions of the activity that would exist in the industry. But people who are approaching it like FB Bank have, and I think you mentioned Silvergate. I mean, they're very openly involved and have done, for the most part, have done pretty well. And Signature Bank, I mean, there's a few others that have openly embraced this space and done pretty well. But it takes the dedication to really want to build out a channel of your bank that deals in this. In our case, I wouldn't say it's exclusively our channel, but it's our primary focus. And so our energy goes towards supporting this space and understanding, the risks and the tools and things that we need to put in place to support it.
Yeah. And what's the history with FB? Was it started primarily to do crypto, or was it a pivot from an existing bank?
Yeah. So I was the co-founder of a business that was was the inventor of the crypto-linked debit card. So we issued the first crypto-linked debit card in 2013 for a company called Zappo. If you've been around for some time, you might know the name, but Zappo was one of the original Bitcoin wallet applications, and we issued the Zappo card in 2013. And that product became an incredible success. We had like 1 million customers in 70 countries around the world. We were doing a significant amount of volume of people essentially spending Bitcoin using their Visa card. I mean, this is the simplest way to put it. And so it was a crossover industry where you had traditional finance meets crypto. And that was a tough business to scale up. There was a lot of friction along the way, whether it was Visa, regulators, banks that we worked with. It was not an easy road, as they say, scars on your back. And so when I left that company in 2018, one of the main goals was like, well, next time around, we want to own the bank, right? We want to, and it wasn't so much to own the bank to control it, but it was to build out the technology and the staff and the mission statement that we could be facilitators of the relationship between fintech companies. I kind of mix fintech and blockchain together because there's it's not a full overlap, but there's a lot of overlap there between what a modern fintech company is and blockchain. And so FV stands for Fintech Ventures. The whole purpose was to build a bank that supported fintech companies. And I joke with people, if we would start it today, we might call it BV Bank, like Blockchain Ventures, because so much of the fintech world has a relationship with crypto or blockchain activities today. And so, we built it so that we could facilitate fintech and blockchain companies to have, access to banking services that really weren't available. And that did evolve into us becoming a digital asset custodian. Custody of digital assets has become like a very important part, especially in the recent, months about, how clients' funds were managed by people who were not properly regulated. And so, we've evolved into, I wouldn't say a pivot, but we've evolved into now a full service digital asset custodian and bank that really allows for like a 360-degree management of one's banking and crypto assets.
Mm-hmm. And the majority of the demand now in the market is from crypto. Is it individuals, like high net worth individuals, or companies that want to safely store their reserves?
No, we're primarily a B2B business. I mean, that we don't have a retail sales division. So the retail accounts we have are really through what would be called a B2B2C process, where some of our corporate and institutional client bring retail clients along with them. But our focus is really B2B. Our clients are companies like exchanges, OTC desks, liquidity providers. We have funds, foundations, family offices. So it's kind of like that institutional ecosystem around the industry is really where we focus.
So would this be like if I go to Coinbase or Kraken or RIP to FTX, but the same general concept here and business model, and I were to transfer money from my Chase Bank or USAA from fiat I wanted to move it into an exchange. The way that the structure flow is that I send it to a bank and that bank is affiliated with the exchange, and that when the money lands in the bank, then it's now accessible for trading in the exchange. So there's a kind of partnership between the bank and the exchange. The exchange will, I imagine through API or some automated mechanism, recognize that the money, the US dollars are in the bank account, and then they're available for trade. So if I'm buying Bitcoin, what's actually happening in the back end is as I'm using the exchange, using the money in the bank account that's under the exchange to give to the exchange, and then I then get credited in Bitcoin, and the exchange is handling that liquidity pair. So that's it. Am I describing this correctly? Like if you think of FTX as a model for just exchanges, this is conceptually what they're doing. And then where was the problem? Like is the problem that the bank is not always, there's not an auditing, or there's not a regulated process for how the banks and the exchanges cooperate together to reconcile funds in those accounts?
Well, you've just done a pretty good job of describing one of the important relationships with an exchange. You used Coinbase as an example. So if you have an account at Coinbase and you want to fund your account in order to buy Bitcoin, let's say, there's a bank involved, right? I mean, in order to go from your bank account to Coinbase's bank account effectively, you need to make a bank transfer. And so that, I start off there as they're really important that like if people are going to acquire crypto assets or digital assets, a bank is required, even if you use a Visa card, let's say, to purchase, which I wouldn't recommend. But if you're going to use your Visa card, or if you're going to send a bank transfer, there is a bank involved that has to receive those funds in order to credit it to the Coinbase account. And, I think the point you made was that in this example, they're providing the exchange, right? So you're using dollars to buy Bitcoin in that example. And that's the word, right? They're acting as an exchange. We used to call that a foreign exchange provider, right? But it's just, it's a new type of exchange. And so where things are changing is that in the FTX example, people were leaving their Bitcoin on the exchange. Well, the exchange is not regulated. They don't have any, any regulator to answer to. They don't have any industry standards, et cetera. So imagine if you bought this Bitcoin on Coinbase, and then you could send that Bitcoin to your bank account. That's a qualified custodian, right? That would be a pretty sea change in how the industry works. And so that's part of what we're building, right? Is so that customers can hold their fiat funds in a bank account. They could hold their digital assets in a qualified custodial account, and they can sleep at night. We're still very big advocates of self-custody. But there are, there's definitely market segments that don't want to control their own keys. They want to hold their assets at a qualified custodian. And so we think there's a great role. Exchanges will still exist. They'll function to provide, liquidity between trading different assets. But for a large portion of the population, especially institutional side, they're going to want to hold their assets at a qualified custodian, and that's a role that we can play.
And do you see the inevitability that exchanges merge with banks, that either maybe in the case of, not saying your business specifically, but that a bank will start and then it'll build its own exchange, or that an exchange will buy its own bank? And so the similar to the problem you were describing with Zappo, it's like, if you have to rely on a third party provider, then it's hard, right? There's problems that arise in the back end. Do you see that as the inevitability, is that these entities kind of converge, the concept of a crypto exchange and the bank become one organization, and that becomes the winning business model?
Well, I think it's going to come from both directions. Give you some examples. So at FB Bank, we have regulatory approval to be a digital asset custodian, and also to provide settlement. And settlement in the context of a custodian means, selling your Bitcoin for dollars or acquiring assets and storing them. And so while we don't ever plan to be an exchange like you would imagine, with candles and trading view screens and things like that.
Right.
The ability for someone to acquire a digital asset and hold a digital asset in custody or dispose of a digital asset back to fiat. That's something that in the very near future we'll be doing full life cycle inside of the bank. So we're coming from that direction. Fidelity just announced that their clients could buy and hold Bitcoin in Fidelity. And now they're starting with Bitcoin. Maybe they're going to just, like us, they're just going to focus on what we would call the more stable digital assets. And so Fidelity starting with Bitcoin is another example. You can buy Bitcoin at Fidelity, you can hold it in their custodial solution, and you can sell it when you're, and that's the same strategy that we've taken. I do, however, think that some of the very large exchanges will attempt to buy banks. I mean, you see kind of in the fallout of FTX, there was a little nugget hitting in there that they had invested some amount of money into a very small bank. I don't think that was the best way to approach it, but they were trying to acquire a bank. Binance had recently announced that they had earmarked up to $1 billion to acquire a bank. So I do think you're going to see the very large players, move to acquire banks because there's going to be a very close relationship between digital asset custody, exchange, and banking. And I think you'll see banks like FV Bank, and you see it in Fidelity. BNY Mellon is moving in that direction where they'll offer digital asset custody, settlement, and banking. So I think it's going to come from both sides.
Yeah. And is that a possible outcome, probable, where FV is acquired by a Binance or a large exchange out there? Or is that not interesting to you at all?
So we get asked from our investors, what's the exit strategy? Like any entrepreneur gets asked, what's your exit strategy? I think there's probably the most realistic exit strategy is the acquisition. I think it could come from two different channels. One is, I think, a large exchange, maybe not the kind of exchanges that we think about today, but maybe a TradFi type exchange that's looking to acquire expertise in the space. Or maybe it could be a traditional digitally native exchange like a Binance. I think that's a possible outcome. I think the other outcome is banks, like regional to mid-sized banks who are late to the game. So you see the really big banks like Fidelity, Goldman Sachs, BNY Mellon are getting involved kind of quietly, methodically over years. Eventually, the regional banks will be late to the game, right? They'll have, they'll see that this is developed into real businesses and they have zero start, right? And so if I were to predict what will happen to FV Bank in the future, we'll either get acquired by a exchange, whether it's a TradFi or a digitally native one, or we would get acquired by another bank that's late to the game and they want to acquire the expertise that we've developed over the years.
Interesting. And do you see in the US, there's thousands of banks, hundreds, thousands, somewhere in that? Thousands, right? To start a new bank seems like they almost remind me of liquor licenses, where it's harder to get a new one than it is to buy it from an existing bar or restaurant. Is that the way you think the industry will start to shift, where these regional banks just become insolvent? They're not innovating at all. They're losing customers gradually over time. Some entrepreneur raised some money, buys the bank, rebrands it, restructures it, but keeps the same licensing and maybe core regulatory competency under the hood. Do you see that as being a trend that may happen?
Well, I mean, it is being tried, I would say. Yes. I mean, we can just look at the FTX example. Like there was an attempt there. We don't know exactly the details, but
yeah,
there are people who are trying to take unproductive, small banks and pivot them. The challenge that they have is that requires them to go back to their regulator and file for a change in scope of business, right? And so you can't take an agricultural lender in the middle of Wyoming and turn it into a digital bank without your regulator understanding what your business model is and what the risks are, right? So
I didn't realize
it's almost akin to a change in control. It's a change in scope. Mm-hmm. And so the people who there are attempts that people have been out and bought regional banks or local banks, and they're working on pivoting their business. Now, hopefully they get regulatory approval eventually and they can start to develop those and we'll have more people in the ecosystem. You've also seen people try to get, novel licenses, like in Wyoming, they have the SPDI. You have a number of people there. Probably the most, prominent one is Custodia, that have applied for a license through a special purpose depository institution license. There's been pushback against trade organizations like the ABA and community bank organizations. There's been pushback from the Fed Reserve that, essentially these novel charters may not have the right to have access to certain financial services, right? And so I think it's a debate that's going to resolve itself. And then eventually you'll have these special charters that can participate in the space. And then you have the approach we took, which is we went to a U.S. essentially offshore jurisdiction. We're in the Commonwealth of the United States. We fall under U.S. federal banking regulations, but we had, an opportunity to start a bank in a jurisdiction where we were able to tell our story on day one about our business plan, and we were able to get the approvals that we required. But it has its own challenges, right? It's not, there's no like straight arrow to starting a bank from scratch.
So your bank is not, it's under the jurisdiction of the U.S., but it's registered somewhere else outside the U.S.?
So we are licensed and headquartered in Puerto Rico. And as all financial institutions in Puerto Rico ultimately fall under, U.S. federal regulation. The local regulator, which is called the OSIF, they closely follow the regulations of the U.S. So, for example, regulations like Bank Secrecy Act, the BSA AML requirements that pertain to any state bank or any federal bank, they pertain to us equally. And so if you think about it from a regulatory point of view, our participation with, regulations for travel rule, regulations for any types of sanctions, identity requirements, reporting requirements, cooperating with other, law enforcement, all the things that apply to, let's say, if you were a bank in Florida, they apply to us equally.
And so what's the advantage of being in Puerto Rico?
Well, for us, the advantages were a little different when we started. My background is in the card issuing space. And when we first looked at Puerto Rico, there is a very interesting arbitrage in Puerto Rico in that as a financial institution, you have a right to apply for a Fed Reserve master account. There's many financial institutions in Puerto Rico that have Fed Reserve accounts. And you fall under all of the U.S. regulation as I previously described. But as it relates to card payments, so Visa, MasterCard, and other payment networks, you would be a member of Visa Latin American Caribbean. And those rules are subtly different, but important if you're a card issuer. And so there was a high interest to it initially because Puerto Rico has this kind of Venn diagram where part of it sits in the U.S. regulation, but part of it falls under Latin American Caribbean. And so we saw that as a business advantage. And it is. I mean, we're a Visa principal member. We have what's called a cross-border issuing license, which means that we can issue cards outside of Puerto Rico and we can issue cards in the United States. It's an interesting challenge because we have to actually issue on multiple bins. So we have bins just for the United States that we have to adhere to certain U.S. regulations, like Durbin. And there's a number of regulations that as a card issuer that you have to follow in the United States. But as an issuer to the rest of the world, we kind of fall under another set of regulations. So, but there's distinct, and I'll call them, they're distinct and subtle advantages to being there. So we saw it as a great jurisdiction where we had a regulator that would listen to our business plan. We got this kind of arbitrage between payment networks and banking. And it didn't hurt that there was corporate tax advantages of being there. We have a low tax rate compared to being in a state, for example.
Yeah, sounds smart. So FTX, Sam Bankman-Fried is, I think, today doing his first interview at the New York Times Dealbook event, which I don't know if it's aired yet, but it's going to be out today, I'm sure. Do you look at that business and think it's going to be there's so many ways to think about the long-term implications. If you look at like a similar example with Enron, who the CEO that took over under that bankruptcy is the same CEO that's taking over the FTX deal and the bankruptcy. I don't know how many, if any, positive outcomes from Enron happened. Maybe there are some silver linings, but do you see this as being a strong net negative? And are there silver linings here? Is it sort of depend how the proceedings play out? How do you sort of make sense of the scale of the impact of this event, given what you know now?
Well, I think it is the Enron moment, right, in crypto. I definitely think it's significant, and it's going to have significant impacts on the industry. It'll have some negative impacts short term for sure. I mean, it's very horrible that people are losing their investments. I mean, that's a horrible outcome. We have a number of companies in the industry that are now in Chapter 11. Now, thank God that they're in a bankruptcy proceeding, so that at least there's going to be order to how the assets are ultimately accounted for and distributed. So, if you look back, there's times when I think that these collapses would not have gone into bankruptcy. They just would have vanished overnight, So I think the fact that these companies are in U.S. bankruptcy courts, they are being reviewed as to what happened, where the assets lie, who are the creditors. I think that's good. That'll be a good outcome. Short term, it's very bad for the reputation of the industry. I mean, that's not helping. But I think a lot like Enron will come out of this with regulation, like lawmakers will be, their hands will be forced to look at this and say, hey, what went wrong here? And what can we do to put in consumer protections? And that's a lot about the thesis that we had in early on, was that, that you needed to have the custodians of these assets and the folks handling the financial flows should be regulated. That doesn't mean that you still can't have decentralized protocols. That doesn't mean you still can't have digital assets, but there has to be some control point, and we believe that. And we think that, the silver lining is that ultimately, I think a lot of this business is going to go to banks and trust companies. And it'll be our part to make sure that we somehow still foster innovation, right? And not just, make this kind of a industry that dies because it's got pulled back into banks and trust companies, but to still find a way to foster innovation. And I think that there is an opportunity for banks and trust companies who will, I think, be the likely winners of this. And an important role for them to play in still fostering decentralized innovation.
Yeah. That's a optimistic take on it for sure. The one large and maybe obvious incentive here to me that seems like the elephant in the room is that crypto, unlike Enron, presents a significant threat to the monetary control that the U.S. government, the Federal Reserve, has. If we do shift a even significant minority of the currency in circulation, the purchasing power that U.S. citizens have, and then Bitcoin or a collection of other cryptocurrencies starts to threaten or at least provide an alternative to the global reserve power of the U.S. dollar, then the Federal Reserve and the U.S. government at large, I can't see how else they look at it other than a threat to the establishment. And when they view it, when there's a collective conscious awareness that Bitcoin equals bad, equals threat to U.S. power internationally and U.S. power over the citizenry, then I would imagine this is the opportunity. And maybe there's another example in the future, but now is when they could just ratchet it up. It's the 9/11 moment. Do you want to make, draconian regulations that people are going to be taking off their shoes in TSA pre or TSA for 25 years in the future? Or do you feel that they're what I want to identify and amplify is the message or the signal that there's a reason why people in politics, the people that have actual influence over the proposed regulations, why they should support the flourishing of crypto and blockchain technology, and maybe recognize it as a threat, but recognize it as an evolutionary advancement, similar to, every other large scale technological turnover. But with that being said, how does that resonate with you? Do you see it the same way? Do you see it differently?
Well, I think this is an opportunity for the right kind of regulation to come into play. I think the basics and this will not be popular, amongst, true crypto enthusiasts, but I think at least when touching financial services, KYC and AML protocols will come into play. And I think that custodianship will come into play. Like, what does it mean to give your assets to a third party, and what are their fiduciary obligations when you do that? I think clarity around those two things are inevitable as a result of this, because I just don't see the U.S. government or any well-established government saying, hey, if you send a $10 million wire to China, we require all of this documentation at the bank. But if you send 10 million USDC, we don't require anything. I don't see that situation existing. So I think there'll be some parity on KYC and AML protocols to fiat. I also think that FTX is really going to push the envelope on custodianship, because the major breakdown, it seems, was that they took client funds and used them for their own gain, or maybe not gain was the wrong word, for their own activity, right? For their own gambling, it seems. So I think we're going to see it in those areas. And I think the reason why the U.S. government would not be, I would not recommend them to try to kill it, to kill crypto, is because this is a global phenomenon, right? This is not just encapsulated in the United States. So there are and will be governments who advance crypto technologies. China's already, running their own central-based digital currency and pilot. You've heard a lot of talk about, Russia now running a national exchange. And there's many more stories like that. And so I think that if the U.S. were to shut down crypto, let's say make it illegal, for example, draconian step, it would put them at a disadvantage on the global stage, because other countries will continue to develop technologies that will ultimately weaken the dollar.
Yeah. Well,
I mean, you look at what's happening with BRICS, right? I mean, they're expanding the definition of BRICS. And it looks like, more and more countries will be working towards trading for things like oil on a different platform than SWIFT. And, while that may not happen tomorrow, with the advancement of technology at the rate it's going, ultimately that's going to happen. Something like that's going to happen. And so I think the U.S. would be at a disadvantage to try to kill it. They got to find a way to allow it to continue to grow so they can use the technologies to their, national and commercial advantage without killing it.
Yeah, that's the hope. I would imagine that. Well, the real question is how attached or how much will the Federal Reserve and the federal government fight the eventual dissolving of the U.S. dollar as the global reserve currency? And how much pressure will they put on allied countries to adopt the same regulatory policies that the U.S. has? Like, to me, I think of this as in some ways analogous to the discovery of the high potential use of psychedelics in the 60s, where initially, like, it was abused. It was super powerful. Like, it's a super powerful mind medicine, but the actual practical medical uses of it were not happening, and the abuse was clearly happening. And the government recognized this as like a threat to getting people to go to fight in Vietnam, right? There was like a growing counterculture movement. So ban, Schedule 1, no research, everything shut down for 60 years, right? It's just now where like these things are becoming legalized and studied in academic institutions, and the the positive impacts that they have are being scientifically shown. And the obvious thought I have is, oh, what a bummer that this was like, think about all the people who died, committed suicide, struggled their entire lives, that could have been prevented had this been researched in a controlled way as opposed to just banned. And to me, it seems like the kind of thing where there's enough momentum now between companies like Coinbase and the hundreds of others that are out there, that there can be a organized resistance to this, where there couldn't have been, like in psychedelic, totally different things, but they have similar patterns to them. And so I view this as well, if it is truly going to be evolution of financial technology that people utilize. And the eventuality is that the US dollar is not the global reserve currency simply because of the fact that the Federal Reserve has the ability to print and give out money to US citizens, which is directly counter to the incentive and benefit of all the other people using it across the world. Like once that, and we're kind of at the, I don't know, middle, the tail end of that realization from other countries. It seems like the US dollar is still being largely supported because there's no better alternative. But to your point, it's like, well, if development of the technology, blockchain technology in other countries passes a critical mass and the US pushes monetary pressure on those countries, they're going to have to make a decision. Like, are we going to be like pro-US and still support the dollar? Or are we just going to say, hey, we're out of this game? China obviously is big and strong enough that they're not using the dollar. They're not impacted. Seems to me like India is going to be a fringe country. Like there's some countries that are like Australia is probably pro-US, but India, where do they go? And it's not clear to me how it shakes out.
Yeah. I think that, the difference is that if you look at the internet, right, the early days of the internet was built on pornography, right? Morally and ethically against most of the grain of most people, right? And so, but the fact of the matter is like PayPal was built on the back of pornography. Like the early days of internet payments, early days of internet access was porn. And you would ask, most households and most government legislators that, we don't like that, right? And I think there was probably a good point in time to kill it. But it didn't happen, right? And the rate of technology advancement is so fast now. You look at what happened with VoIP, like, the phone carriers said, oh, no, that's never going to work, phone over the internet, right? Most calls now are carried over VoIP, right? So I think that the risk is that the technology, number one, is global. Number two, it's advancing at such a fast rate that the US killing it would be a very bad global mistake. They should be the global leader in blockchain technologies and a global leader in regulation around allowing it to grow and fostering it rather than killing it. Because it's going to continue to grow. I mean, unless there was a coordinated, the G10 got together and said simultaneously on this day, we're killing it across the board, right? That would, I wouldn't say it would kill it, but it would certainly put it underground.
Yeah. Yeah. And I think go ahead.
I just don't, I would like to think that we have smart enough people to understand that this is technology that's not going, it's not going away. And suppressing it is not the best thing to do. It would be fostering it and making America be the leader in blockchain and digital assets.
Yeah. Yeah. Jump on board, be the best place. I mean, to me, it seems so obvious. And a policy you could enact today would be build the wall, but open the front door. Make it easy for smart immigrants to come into the United States, like what has worked for the history of the country, but also make a fairly robust perimeter so you can control. Like you have to do both in sequence. And to me, it seems like there's like a false pretense of political disagreement, but they're almost like arguing for different things. Like one side says like, we want to build the wall. The other side's like, we want to let in more people. Well, you can do both together. And it seems like you can create regulation, you can allow for the flourishing of the blockchain technology, but you have to be aware and you have to have a nuanced and sophisticated way of communicating that. And I look at our political leaders now and think, is that going to happen? Is there going to be a sophisticated, nuanced discussion about this? Or is this going to be like white and black, good, bad? Oh, you're anti-Federal Reserve, you're anti-US government, you're bad, crypto bad, ban it. And
I mean, I'll give you a firsthand example. I talked about it, the business, the debit card business that we built, back starting in 2013. It's pretty well public knowledge that that business died in January of 2018 by a cease and desist letter from Visa. I sat in numerous board meetings. I sat in MasterCard's boardrooms, in number of briefings back and forth about this conversation. And if I were to make it sound like a boardroom, on the left side of the table in the boardroom, we had people that were just saying Silk Road, money laundering. And then on the other side of the table, we had people saying, well, this is innovation. We should foster this. This is going to be the future. Inevitably, Visa killed our project, right? They killed 1 million card holders and it died. If you go now, like I was at Money 2020 just recently, Visa has a big booth that says Visa Crypto, right? And so So, they killed it just long enough to get their arms around it. And now it's, it's a very interesting, like if you go to Visa and MasterCard booths at a big trade show, Visa crypto is an actual division of Visa now. Right. And so this is a project that just in 2018, they killed the largest provider in the industry. So, sometimes like you need these watershed moments, like what's happening right now in order for, I think if U.S. regulators came around and they did some of the things I just said, if they said, listen, KYC and AML apply, consumer disclosures apply. Like if someone's going to be purchasing Bitcoin or Ethereum or whatever, you need to give disclosures. Just like if you open a money market account or you buy stocks, you have to sign a bunch of disclosures, right? And so disclosures, and then probably rules around custody. Like, if you're going to not hold your assets yourself and you're going to give them to a bank or an exchange, there's going to be rules around how those are treated, right? They should be bankruptcy protected. They should be held in a fiduciary capacity. So I think that is what's going to come. I don't think that, I don't think the draconian move of trying to kill crypto is going to come. I think there's going to be painful regulation for those people who aren't prepared for it. And I think the maximalists who just want a decentralized world, it's going to be a hard, pill to swallow. But I think that's where it's going.
Yeah. Yeah, that seems realistic. I think that I never could quite reconcile the reality of how a Bitcoin maximalist sees the transition of power from the Federal Reserve to a world where we're all using crypto. Like at the end of the day, what happens if you don't pay your taxes? Like you can't just I'm not going to pay them and like no one's going to knock at my door. Like eventually you'll be in jail, and that's death and taxes are the most inevitable things. So it seems to me like that you have to play the realistic, anticipate the realistic trajectory. Go ahead if you got it.
Yeah, I mean, that's a very interesting conversation, right? I mean, no matter who you ask, you can ask some actors and they'll say a Bitcoin is a Bitcoin is a Bitcoin, which I get it, I understand, but an ounce of gold is an ounce of gold is an ounce of gold. But at the end of the day, we all say, how much is it worth in dollars?
Right. That's always the denominator.
So there's always this correlation back to what is its buying power in our universe, right? And so if our buying power was in, beans, we would say, how many beans can I get for a Bitcoin? Because I need to buy, I need to pay for my groceries with beans. And so as long as we have national currencies, it's always going to be a correlation, whether it's gold is priced in dollars, right? An ounce of gold is worth so much dollars. And so even the best reserve asset that people have ever imagined, gold, or now digital version of it, Bitcoin, is still always going to be priced back to a national currency. So I don't see a future where a Bitcoin could be worth $1 million, like upon conversion, because it's a rare commodity. But I still always see the dollar or the euro or whatever maybe the dollar goes away and we have something new. Mm-hmm. Maybe we have a central bank digital currency that's called something new, but we're always going to say, well, Bitcoin is worth so many central bank digital currencies because that's how I pump my gas.
Yeah. Interesting. I want to ask you a little bit more for a minute on Visa, MasterCard. They're such an enormous network, largest payment network in the world by far. It seems like an oligopoly between the two companies, maybe Discover on the fringes, or Amex, I guess, would be number 3. They have a incredible incentive to not just preserve their existing business model, but somehow shape the evolution of crypto so that it doesn't go head to head really with the concept of a super low transaction fee and super fast payment network. I mean, speed and price are their two biggest value adds. Do you see them maybe as explicitly or implicitly influencing the development of crypto to point more towards gold rather than towards cash? Because we don't have a cash. And, the fork, Bitcoin fork was kind of about the block size war, which was about, was it trajectory towards gold or trajectory towards cash? And, the vast majority of people now using Bitcoin is thought of conceptually as high transaction fee. It's slow. It's like seven transactions per second compared to 70,000 for Visa MasterCard network. And it's thought of as like digital gold. But that leaves to me this wide open vacancy of utilization for cash and the internet for microtransactions. Do you see Visa, MasterCard's real strategy? Like if you peeled back in the boardroom, are they saying, hey, delay the inevitable, somehow, like what are they actually trying to do? Or where do you see their steelman argument?
If you think about what Visa is, it's a network, right? It's a connected network of merchants that have, they have a client on the merchant side and they have a server on the Visa side. If you think about it, it's just a network. You have a client server network. You have millions of points of sales that are running the Visa client and that people can walk in and they can, enter their payment information. And it's a data network, right? With client and server connections in the most simplest description. We always call it the rail, right? The dream has always been to create the third rail. So you have Visa and MasterCard were rails 1 and 2, and everyone wanted to create the third rail, which was the new competitive rail to Visa and MasterCard. Most people don't know that Visa has a division called Visa Private Label. They sell excess capacity on their network in an unbranded fashion, right? So if you think about it like internet capacity, at some point, wireless, providers decided, oh, we have all this extra capacity. Let's sell it to General Motors for their cars, right? And so Visa even sells excess network capacity to private label providers. And the way I look at blockchain for Visa is that, one is it's a network upgrade, right? So, they're doing betas right now with USDC. So if you think about, USDC is just a dollar denominated, it's a stablecoin, dollar denominated blockchain transaction, right? And so from Visa's point of view, think about it as a network upgrade. If settlement between the parties, you have issuing a bank, acquiring banks, merchants, and Visa, if that settlement can become instantaneous and it's, it's reconcilable in a public ledger, even on a permission ledger, it becomes significantly more efficient, and so today, the reality is if I wire money from our bank to a bank in China, it's T+1 or T+2 for settlement. If I take the $1 million wire or $1 million of USDC arrives in 10 minutes, irreversible, that doesn't even compare. So you think about it, would you consider that a network upgrade, right? If you could transport money from A to B in 2 days with a cost of, whatever dollars, or you could do it for a fraction of that over a blockchain network. And so when I think of Visa and MasterCard, why will they embrace these technologies? Because it's a network upgrade. Their settlement, their reconciliation, way to capture, new transactions will become so much easier.
Interesting. And particularly for cross borders from one country to another, because I would imagine within the United States, for instance, it's just the database change. They're just saying debit, credit this account. To me, it seems like centralization is very efficient, but it's not very resilient. You're trusting one person. Decentralization is very resilient, but not very efficient because you have to propagate that transaction information across all the different nodes. So it seems like Visa, MasterCard has reached like a maximum efficiency, but not an optimum resiliency, if that makes sense.
Yeah, I think that's a fair characterization, but you also have newer blockchains, which, if you look at proof of stake type platforms or permission-based platforms where you can get that speed and efficiency, that are different than a proof of work platform like Bitcoin. So I think you'll see purpose-built blockchains for trade settlement. That'll make a lot of sense. Today in FV Bank, we're one of the very few banks that, or I don't know of any others for five, as a matter of fact, that support USDC deposits. So if I have a client who's going to receive $1 million payment from a foreign country, or even from the US, US is going to be, 1 day or same day, and foreign is going to be 1 to 3 days. If I raise an invoice to you and say, okay, send me the payment, whatever amount it is, I can have that deposit in my bank in a matter of minutes, right? Because we resolved that transaction to dollar. We just used USDC as a rail, think of it as just a competing rail to other ways of getting value from A to B. And so the same thing goes with making a payment. If I need to pay you and you say, well, Miles, I'm not going to do this podcast, not that you charge me, but I'm not going to do this podcast unless you send me the $1,000. I could send it to you instantly over a blockchain. If I send you even an ACH, it's going to take a couple of days to settle, right? And so just that pure efficiency and accountability that can be achieved is huge, right? Go back to your early cell phones, where we got our first browser and it was so slow and we thought, well, this doesn't work. I mean, now it's like speed matters, right? Speed and capacity matters. It's made the difference in our lives.
Totally.
And I think that's what's going to happen in financial data, is that speed and capacity will matter.
Yeah, absolutely. And especially in countries where bandwidth is limited and information throughput is not so high, then like access to the internet. I saw a stat the other day that like 1 million, it might have been like 1.5 million per week come online from India with high fidelity internet, high bandwidth internet, which is just, and there's going to be more people speaking English in India than there is the rest of the internet combined in the next 5 years. Like most of the people watching most videos and podcasts are going to be out of India, which is nuts.
And their payment networks are far advanced than ours are, especially on the consumer level. And I think that's a lot of it. And I wouldn't necessarily attribute it to blockchain, but it is to do with technology in the upgrade. They have RPay there, which is basically a real-time payment network, which is, we have FedNow coming, we have RTP services out there, but the reality is we don't really have an instant payment network in the US yet.
Yeah. Venmo. And I guess that's,
Yeah.
But it's not a network. It's just a company that maintains
It's an app, right?
Yeah, it's an app. Who are you?
It's a good one, by the way. All credit to them.
Yeah, no, I dig it. Now PayPal. Who are you learning from, or who do you follow? Is there any particular books or people or blogs that you pay attention to or have influenced your thought over the last few months or years?
Maybe not super popular today, but I really have, for the last several years, I've been following Elon Musk. I mean, it's like such huge goals, and huge missions. I really like that. I like things that are difficult to do. People ask me, why are you running FB Bank? It's like such a big challenge against regulation, against norms, your two industries colliding. I like challenges. And so I really look up to what Elon Musk has done. I mean, I look at what's happening with Twitter and, stay out of all the politics, but it from my lens, and I appreciate that other people have other lenses, but from my lens, he's stepping in like an entrepreneur and saying, I'm going to run this like a business. Like I'm cutting costs, I'm adding features, I'm creating revenue channels, and so, but on a global, massive scale under the microscope of everybody, right? And so I really look up to that. It's like he's taking on a massive challenge and taking on, and he's put some $40 billion on the line to do it. And so I really look up to what someone like that is doing. I mean, there's interestingly enough, like a lot of my life lessons that I use in my, my moral and business ethical compass today, at the time I learned them, I didn't really appreciate them. Like they were tough for me to digest at the time. I had some, business colleagues throughout my career that, most of them worked for me, and sometimes I had very difficult lessons that I had to learn. And at the time I would have told you they weren't a lesson. I would have said that they were like, just annoying and bothersome to me as a person. But now I look back and I say, wow, that person taught me a lot. I've given this example before, but I think it's worthwhile. Like being an entrepreneur, you just have a mind full of ideas. And I used to walk into meetings and like lay it all out, and the rest of the management team would look at me like, oh my God, what did he just say? Like he said, 19 different things. Which one do we listen to? Mm-hmm. And so I had hired the CEO in one of my companies. I give him credit. His name is Pat Hazel. And he took me out to the side one day and he said, hey, you ever aired up a balloon and then just let go of it and it just goes flying around the room, nobody knows where it's going to land. He said, when you walk into the room, that's what you're doing. He said, people don't know. So the same air in that balloon, let it out slow. And at the time I thought, no, you just don't like the fact that I have a lot of ideas, I was like, you don't like the fact that I'm full of ideas and I'm the visionary around here. And then later on in my life, I came to realize like how important that was to manage those types of things. Like letting the air outflow is one of my favorite sayings. You know, you're talking to a regulator, you're talking to a vendor, right? You may have grand vision, but you got to let the air out slow so people can digest what you're trying to do. And I have a lot of those examples like throughout my career where they're just silly things that happened at the time. And then 5 or 10 years later, I look back and go, what a lesson that was.
Is there anything else that comes to mind that was so good?
I mean, there's just, try to give some, you know, one of the things, like one of my, another mentor, and it's a cliche saying, people have heard of like all good deals die 3 times, or all good deals die 3 times at the altar. And the idea was, you know, when you're an entrepreneur and you're trying to raise money or you're trying to win an account or something, you're going to fail. You're going to get no's. And I got a lot of no's in my career. You know, you can't do that. We don't believe in your vision, like whatever, you name it. I've heard it as an entrepreneur. And so if you built it into yourself that say, listen, you know, this deal is going to die 3 times before someone believes in you. And it's just, it's a cliche. It goes along with like, you know, the salesman that has to get 100 no's before he gets a yes. But just understanding that no is not the end of the game. It should make you stronger, make you think more about your proposition and get it over. And so I had this one guy early in my career, we were trying to raise money for one of my companies and we were getting no's. And even at that, like you get a yes and then you get into due diligence and you get into closing and it fails. I mean, I have one very real example is that one of my first times I ever raised money, I was doing a Series A, and we signed documents. It was like 50 pages, Series A, painful. Lawyers were present, 6, 7 signatures on the pages. And I was at the venture capital firm and the partner broke out a bottle of champagne. And, he popped the cork and we all drank champagne and I grabbed the cork and I said, I'm going to save this to remember. This is my first Series A. And I wanted to remember, this moment. And long story short, the VC never funded. So they had a problem with their LPs. They ended up not funding. I called my lawyer and said, should I sue them? We have signed documents.
Yeah.
Should I sue them? And he said, Miles, just go on with your life. So I carried that cork in my briefcase for at least 10 years
God.
As a reminder that, that anything can happen at any moment.
Yeah.
Right? And so I literally carried that that champagne cork in my briefcase for about 10 years. And I would pull it out and tell people that it's not over until the money's in the bank or, there's all kinds of different cliches that go with that. But that was another big lesson. Like, I literally was drinking champagne and celebrating with the VC team and the lawyers, and then the money never came.
Wow. That's a stunning reminder of the construction of venture capital is that they don't VC capital, some angel fund, Series A fund raises $80 million to invest in startups. They don't have that money. That's money they have to request from LPs. It's just a contract that the money is available for deployment, which is, oh man, that's I've never heard anything that close. Usually like the partner at the VC firm will kill it last minute for some reason, but
I think, they were in, I was in a venture conference last week in North Carolina. And, one of the partners was saying that basically like LPs are sending them the notes that we're not funding now. Like, we're putting our funding on pause.
Yeah.
And I think that, it reminds me of the cork.
Yeah. Yeah. It seems a little bit strange, I guess, that LPs would still have the power to not invest if they've already raised the fund, but I don't know.
Well, they might have capital calls, right?
Yeah.
And if they say we're not going to be able to honor the capital calls. So anyways, you asked about, mentors and life lessons. I mean, those, and that's what makes being an entrepreneur exciting, right? Is that, they do, those moments are not very nice when they happen, but they do teach you a lot.
Yeah. Yeah. Not nice, to put it mildly. Miles, thanks so much, man. Congrats on all the progress. What a really exciting business to be a part of. I hope you guys keep crushing it and make a real meaningful impact in the industry and the world at large. And thanks for sharing your time and your insights here on the podcast.
Thank you. Thanks for having me.
All right. Take it easy.
Thanks.